Hi, I'm Dallas Baird for the Finance News Network, and joining me for an update on the Antares Fixed Income Fund is Portfolio Manager Mark Kiely. Mark, welcome back.
Happy to be here.
The Antares Fixed Income Fund's been running for over 4 months now. Can you just give me an introduction again to the fund and who it's targeted at?
The Antares Income Fund is a fund that's designed to provide a stable income stream by using a diversified series of fixed income strategies. It uses a core and satellite approach. At the core is the Antares Enhanced Cash Trust. That's a cash trust that we've been managing Antares since January 2007, so pre-GFC. And throughout every single month since inception, it's always had a positive absolute return, so a very strong track record. Then around that core, we have a series of other strategies to dial up and dial down the risk within the Antares Income Fund. Those other strategies include the short duration credit fund managed by Antares, the Antares Credit Relative Value Fund, as well as global investment grade credit and global high yield. It's a lower risk yield offering with a very stable yield offering. And its key focus being on capital preservation and liquidity, we think probably lends itself to being attractive to those approaching retirement or maybe in the early post-retirement phase.
What are the most common questions investors ask you about the fund and your processes?
Sure. One of the most common questions I've been asked has been, why now? Why are we launching the Antares Income Fund now? And the answer to that is that Antares has a long successful track record of in excess of 20 years in managing to wholesale and institutional client bases. We manage around about 22 billion in that space. But we've never actually had a retail offering to the market. In the, let's call it the safe yield offering, term deposits has been a very attractive proposition for a lot of investors over the last several years. But we're finding that the market now is that term deposit margins are compressing, and also with maybe issues around breakability going forward, as banks charge for the ability to break TDs, may mean the liquidity in those products is going to be less. So we've thought about what could we offer the market as an alternative, and hence the Antares Income Fund is what we're coming out with, which is a fund that's focusing very much on capital preservation and achieving a good return.
So what's the current positioning of the Antares Fixed Income Fund?
The Antares Income Fund current positioning is what we would classify as defensive. Credit spreads have had a good run. They're approaching historical lows in the post-GFC period. Equity markets are reaching all-time highs. So the markets are very much factored for a lot of good news. We think that maybe there are some risks on the horizon that maybe upset that scenario. China growth is slowing down, and the European Union still has some unresolved issues. So in that environment, we've actually pushed the portfolio into a defensive positioning to preserve capital, which is one of the key objectives of the Antares Income Fund.
Now, the RBA appears to have put further rate cuts on hold. What's your view on interest rates going forward, and how's this likely to impact the Antares Fixed Income Fund?
The Reserve Bank has been quite explicit in removing the easing bias. The question is, are they going to move to a tightening bias? At this stage, there's no real signs of that happening at the moment, but there are risks out there. Only last week we had the Governor of the Reserve Bank commenting on house price appreciation, which is referring to essentially risks of asset bubbles, you might say. If as we move out into the later part of 2014, early part of 2015, the world economy continues to improve, and maybe the Australian economy actually transitions from the resource sector driven growth dynamics into a more broader based growth, you may find that interest rate tightenings come back onto the agenda. In that scenario, how would that impact the Antares Income Fund? Well, it would actually be quite a positive, because you'll find that the Antares Income Fund will actually rise up in yield in line with rising rates, because on average its securities or its investments reset every 45 days. So very quickly it will actually rise in rates in line with rising cash rates.
The Federal Reserve has started to taper its quantitative easing program. What impact will that have on yields and risk assets like equities?
Sure. We saw what was referred to by many market participants back in May last year, let's call it the taper tantrum, whereby risky assets got sold off, particularly emerging market assets, as people started to think about tapering. We've now actually had a situation where tapering has actually started and is going to continue. The biggest thing in my mind is not so much about tapering, but it's more about monetary policy expectations. At the moment, people have disassociated tapering from monetary policy changes. I think as we move into the later part of 2014, I think people start to focus on monetary policy changes in the US. And as that front-end cash rates is either going to rise or perceived to be rising, a lot of those cheap carry trades that have funded risky assets may start to unwind, which means that risky assets such as emerging markets, high yield, and even equities may actually find themselves delivered on the offer zone or basically being repriced downwards.
How does the Antares Fixed Income Fund differ from traditional fixed income and other income funds?
With respect to traditional fixed income funds, they traditionally carry a lot of duration risk, which means that they tend to underperform in rising rate environments, capital losses from rising rates. The Antares Income Fund, as I mentioned, actually benefits from rising rates. Other income products out there, such as, let's say, equity-based or equity income funds, have an equity market beta embedded within the product. So they tend to obviously be exposed to down equity markets. But the income fund that we're presenting with, a fixed income fund, doesn't have that same equity beta, but has very much a key focus on capital preservation.
Your fund targets a return of 1% to 2.5% after fees over bank bills. Why such a large range of targeted excess returns?
The reason we've got a large range of targeting excess returns is because where we're starting from, and the starting point for us in the Antares Income Fund is about the first two key objectives, being capital preservation and liquidity. It's only after we've actually made those two key objectives in the way we've structured the portfolio that we actually focus on return. So in various environments, we may find ourselves not being able to actually get a 3% return simply because to do so, we'd have to put too much risk in the portfolio and therefore threaten that capital preservation focus. So hence the larger range. So there'll be parts of the cycle where we'll have the lower end of that range, and there'll be parts of the cycle where we're at the top end of that range, being able to capture returns when assets are priced accordingly.
Mark Kiely, thanks for the update and good luck with the next quarter.
Thank you.